Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with us, as always, on our Wednesday show is David from DeFi University and Jake Hall from Builder Wealth. How's it going, gentlemen?
It's going great, somewhat, with the
Yeah,
recent news, but
yeah,
Yes,
yeah.
somber. Not good, Mike. I mean, if I'm completely honest, man, just watched Charlie Kirk get murdered,
Yeah,
and that was right after we watched Irina get murdered.
yep,
This obviously can't continue. Really, really horrible.
absolutely, absolutely. Well, it's I kind of, I mean, I don't want to get too far down the road, talking about this because to be honest, there's going to be no end of people talking about this, and to be honest, I don't think a whole lot is going to change. So, um, it's I just don't want to be another talking head, basically, yelling into the abyss. So, yeah, I mean, it's terrible, and I hope something changes. But to be honest, I am not holding out much hope. So that being said, sorry about kind of being negative about it. That's just
yeah.
it's we see it repeatedly, and nothing ever gets done. So let's jump into our topic. The markets have been moving a bit. Both you gentlemen, when I talked to you earlier today, we were talking about the potential that there might be some liquidity rotating into high caps and mid caps, low caps. There's uh, some movement going on right now. David, do you want to kind of jump right in and kind of tell us what you're
Yeah.
seeing?
So that'll pull me out of the abyss. Let me talk about
Yeah,
markets
yeah.
for a second,
Let's.
man, because look, we can go down a rabbit hole with that forever. But those people did not deserve what happened to them.
No,
Um,
no. It's
so
I'll just get angry if
yeah,
we start
man,
talking
me
about
me
that
too.
stuff.
So
Yeah,
so here, Mike, I'm sharing my screen. I don't know if you can see it, but I've
yeah.
got
Let me
Trading
pull it
View.
up. I'm gonna.
Yeah, I've got Trading View pulled up here. I just want to talk through a couple of items that are on my radar, and a couple of things that have happened, today. So the first thing that I want to talk about here is Oracle. All right. So remember, this is a $1 trillion company, up 35% on the session today because of some projected revenues that they see, okay, in the future. So, the AI narrative, is still very frothy. But, if you think about what Elon Musk said just a couple of days ago when he was talking with David Sachs in that panel on that video call, Elon Musk was talking about the Optimus robot and how the software is not the challenge, it's actually the hand. And so they're working on getting the hand right. And so imagine, in a couple of years, these Optimus robots with the entirety of humanity's knowledge embedded within them and a hand that is as good as ours, able to replace all human labor. That's basically what we're talking about here with
Mm,
AI. And I think that, a rally like this, I mean, come on, this is excessive. And when I look at the S&P, so here's S&P futures, this has been a monster rally, and we really haven't seen many pullbacks after we broke out to fresh all-time highs. No real pullbacks to speak of. And so that's the first point. Oracle plus 36% today, S&P plus it's like 35% from the April lows, and then we got the PPI print, and that
my
US
my one of my favorite projects, Plume, is moving. Over the past 2 days, it's up 44, almost 45% in 7 days.
Yeah. So I want to get to the rotation, into alts, but I think we need to frame it. And Mike, I don't know, do you still see my screen or no?
I pulled it down while you were talking.
Okay. So here's yeah, let me just hop back in here. So, S&P ripping higher. A big AI name, Oracle, plus 36% today. PPI, the producer price index, came in cooler than expected. And so in 2020, the leading inflation indicator was the producer price index. And since PPI came in cooler, it seems as though Fed Chair Powell may have all the cover in the world that he needs to cut by 50 basis points next week. There's only a 10% probability right now of a 50 basis point cut. A 25 basis point cut is all but assured. But here's something that I'm looking at that I want to share with you guys. And this is the risk that I see out there. Okay? Take a look. I'm sure that you've heard in the news, and let me zoom out to a weekly here. Take a look at long dated bonds from Western democracies. So I'm talking about, Japan, the United States, Great Britain, Germany, and France. Yields on these long dated bonds have pushed sharply higher over the last couple of years. But zoom in specifically on what happened last September when Fed Chair Powell cut by 50 basis points and the setup leading in to that September cut. So here is the yield on the US 30-year. So leading into that 50 basis point cut, bonds were bid. So remember, yields and bond prices are inverse to one another. So as yields were moving lower, bonds were moving higher into that September decision. Now, what else happened leading into that September decision? Well, we got those revisions. Turns out the payroll numbers were revised down by 800,000 jobs, and that happened in 2024. Now, what did we just get? We got another revision yesterday, the largest revision ever. It was like 911,000 jobs revised away. And so what we're seeing here, I think, could be the same type of setup where bonds are bid, meaning rates move lower into the meeting next week, and then Powell cuts by 50 bips. A bip is a basis point, and then the reaction from the long end of the yield curve is instead of moving lower, it's the exact opposite, to move higher after a cut like that, signaling that it was a policy mistake. And so what would equities do if rates move sharply higher and quickly? I think that equities would pull back. And since Bitcoin, Ethereum, and every alt, they're all positively correlated with the NASDAQ. So if equities are pulling back, I would be cautious about Bitcoin and alts. But we don't know that that's going to happen. I don't know anything about direction. I don't have a crystal ball. I just look at charts. And what we have seen, you guys, is a rotation. We've seen the first rotation from Bitcoin into ETH. And you can see that if you take a look at ETH BTC. This is the first rotation. And now I think we're seeing the second rotation from ETH and Bitcoin into Solana and large cap alts. And you can see that if you take a look at Sol in ETH terms. Notice this really nice push higher above the 200-week moving average. And you can see that here if you take a look at Sol in Bitcoin terms. Reclaiming its 200-week moving average, putting in a really nice W pattern, and it seems as though Solana may have some room to push a little bit higher in Bitcoin terms. So we're seeing these rotations as Bitcoin dominance is breaking down. So if we get another couple weeks of Bitcoin dominance down 5% or more in a week, that's your alt season. And so what I'm thinking is we should see alt season, real true alt season, within the next 90 days. I think that by the end of November, it will have already come and passed. That's what I'm thinking. But I'm also thinking that there is risk next week. And that risk is that long dated yields blow out in reaction to Fed Chair Powell cutting the short end. And that would be negative for equities and negative for crypto, which I think would set up the perfect buying opportunity. Because I think that throughout the rest of the year, even if there is a pullback, that we push much, much higher. So that's my 2 cents, you guys. That's what I got for you today.
What about you, Jake? What are you seeing?
Well, as always, I don't have much additional to say on the market than David. He obviously hits that right on the head. But what I will say is, I've been looking for, whether I want to like kind of rent or buy a home over the next like couple months or so. So I've been communicating with like mortgage lenders and stuff like that, and they're already pricing in those rate cuts at 25 bips. Like, previously I was quoted on a 15-year note at like 5.15%, and I got word yesterday that I'm quoted at 4.95% now because of the rate cuts in the US. So it's very, very nice, I guess, seeing that rate cuts are finally coming in. Even when they haven't even officially been cut, they're getting priced in. I guess my only concern here would be, what if they're priced in too much, right? What if we don't see the reaction that we think we're going to see once rates actually do officially get cut because everything's already priced in? That's another thing that, just like for those of you that are going to be leverage trading or whatnot, should keep in mind, because 3 years ago or so, there was a little bit of a cheat code in crypto. And when I say cheat code, I mean you wake up at 7 a.m., whatever time it is, when Powell's speaking on rates, and you instantly just you see if he cuts rates or raises rates, and then you go like 25x leverage on some ETH or Bitcoin or something, and you make some easy money. But now what we've seen is a lot of the times those cuts are going to be priced in, or those moves are going to be priced in just based on what we have prior. Especially at this point where there's more certainty. So, yeah.
All right.
So Jake, you think that it might be a sell the news type event next week where these cuts have already been priced? Markets are at all-time highs, equity markets anyway. So you think that maybe when Powell cuts next week, that maybe markets actually sell off on the back of that cut because it's already priced?
I wouldn't say sell off. I mean, more of like, we're not going to see as much of a jump as we would typically see, basically, right? If Powell were to come out of the woodwork, say like 6 months ago, and say, hey, we're cutting rates by 25 bips, the markets would go parabolic, right? Because it's out of nowhere. Nobody knew that was coming. But now it's like we have a lot of certainty that there's going to be a 25 bip rate cut. Now, if he comes in at 50 bips, then that's where we're going to see some price movement. But at 25, I just don't think we're going to see too much. And I could be completely wrong here. But just my 2 cents on that. So,
Yeah, man, let's see what happens.
yeah.
Yeah, no, it's I'll be honest. I mean, the past couple of days, I've just kind of been sitting on my hands, not doing much of anything, when it comes to DeFi or crypto or anything like that, because it just kind of feels like we're just kind of at that doldrum where there's a fork in the road, and which way are we going to go? So I'll be honest. Like a lot of my liquidity pools, I've actually gotten out of, and I'm just hodling. There's a couple, like a KTA that I have, small positions in just in case, just because, there's some good APRs, and, they're juicy enough to where, I'm okay with, a portion of my holding, being in a liquidity pool, not all of it, but a small portion of it, just to keep stacking. But, but if things start to take off, I'll probably close that out too, just so I can get the max price appreciation. But, that's kind of where I'm sitting is, it feels like kind of what David, when we were texting back and forth yesterday, I believe it was, we were talking about where pretty much historically, if the 4-year cycle holds, here in the next 60 to 90 days is when we should see, where we all get rich, or,
We should see all season.
and if we don't, then, we got to, remap, what the 4-year cycle, 5-year cycle, no more cycle, whatever looks like, because we're in uncharted waters. So,
Yeah.
what is, Jake, let's have you go first this time. I mean, what are your thoughts on the current cycle, or just historically, the 4-year cycle, and kind of where we're at? And do you see anything that makes you think that we're going to hold to the 4-year cycle, or that potentially we're in a super cycle, or all the different narratives out there?
Yeah. So, like, I think as David has mentioned in previous sessions, right, 4-year cycle only works because of all these uncertain events that have happened. We don't have much data to go on, especially now that we have institutions in the water. So, like, I've been thinking a lot about this over the past couple of weeks, and my thought is that we are going to peak this year. We are going to see a drop, which is probably going to lead into Q1, Q2 of next year, right? But I do think that 4-year cycle gets broken this time around. B, we're not going to see as much of a drop in Bitcoin, Ethereum. Altcoins will probably get wrecked, just not as much. They'll still probably get wrecked though. And then the other thing is C, is I feel like we're not going to be in as much of a bear market. You know what I mean? Like, we're not going to be, 2 years bull, 2 years bear, just like it's been in the past. I think we turn around quicker and we kind of break that trend. Because as we mentioned, like the Bitcoin cycle really only works, quote unquote, because there's less and less Bitcoin being put in circulation, meaning that Bitcoin's becoming more valuable. But the thing is, there's already 19.9, call it 20 million Bitcoin in circulation, and there's a max supply of 21 million. So, like, the difference that the halving makes now versus later is just so marginal compared to the overall supply of Bitcoin, that it does make sense for that to be broken somewhat around this point in time. And I think now that we have institutions in, that's like the perfect time for that cycle to be broken. So what I'm aiming for kind of this market around is exiting this year sometime whenever I think we're at the peak, laddering out through crypto to stable positions. Most likely, I'll be laddering out of my alts into ETH, as ETH underperforms those alts, and I'll take that ETH that I now have and I'll ladder out of that ETH with crypto to stable positions. And then the other thing is I'll be in stable positions for probably about a month until we see a clear market direction, maybe longer if the market's still going up. And then I'll switch more into bearish positions, ride that downside, see where we go from there. And, if I think there's a long time coming, then I'll just continue out those positions. If not, and I think that the market's going to turn around relatively quickly, I'll get back into the market next year, probably Q2, Q3.
Well, so before I kick it over to you, David, I guess I kind of want to ask each of you your opinion on like my strategy, and by all means pick it apart if you think that it's a bad one. But I mean, I've told you that I'm looking to get about $400,000 or $500,000, and I'm out, and I'm going to be all in on stables and basically just do stable strategies and just use that as a treasury, and the yield that I earn, use that to do what you're talking about, Jake, and just basically DCA back in as I see appropriate, in depending on what the market's doing. I mean, is that a solid strategy, or should I rethink that, or what are your thoughts?
David, if you want to go ahead and speak.
Go ahead, Jake. Yeah, no, I want to hear what you have to say.
I was going to say, I think it's a solid strategy. The only thing that I would be realistic on is expectations. And it all depends on, obviously, allocations, how much you have in altcoins, predicted growth behind those altcoins and stuff like that. But like, I'm not thinking we're going to go anywhere near a 7x for Bitcoin, Ethereum, Solana, those assets, right? Like, I'm thinking Ethereum goes maybe 2x from here. Bitcoin goes up maybe 30, 40, potentially 50% from here.
Pretty much, I'm in like mid to low cap alts.
Okay.
like I'm DGen.
Yeah, so alt season comes in, assuming you have your plays correct, and assuming like you're in solid assets like me and Dave have been talking about, then I think that's more realistic to see that 7x potential return on your portfolio. So yeah, I'd say it's a pretty solid strategy. Play with house money. Yeah.
Well, sorry, I not necessarily the 7x part, but just the exiting into stables and that whole strategy. Because I mean, yeah, who knows? Who knows what my portfolio is going to do? I mean, it might 2x, it might 3x, it might 20x, it might not x at all.
Yeah.
But it's I'm just kind of curious, with the way that the market seems to be potentially evolving, if that would just be a safer play, lock in those profits into stables and, earn with those and just kind of ride out, whatever the storm is, if it's going to be the 4-year cycle, if it's going to be an extended cycle, because that way at least, and the way that my thought process is, kind of my thesis is that if I have that value locked in, it really doesn't matter what the market does, because my focus is going to be, shift from what you're doing, Jake, right now to what David's doing. I'm going to be shifting from, asset accumulation to wealth preservation and generating yield that I can use for, my living, and again, reinvesting in the markets, buying some real estate, whatever.
Yeah.
So it's like I'm kind of like a third, like I said, Jake, you've talked about how you're basically stacking assets, stacking your tokens, and your strategies are more to build your bags. Whereas David, he said that he has a good amount of liquidity, and he's using that to generate his lifestyle.
Yeah.
And so I'm kind of in the middle where it's like, yeah, right now I'm doing Jake's strategy, and then I'm going to transition to David's, once this market does something, hopefully.
Yeah. No, I'm right in line with that, Mike. Like I plan to transition more towards like stable approach
Okay.
once the bear market comes in. What I would say is like, don't like we have clients all the time that come to us and they're like, hey, I got like $500,000, I got $2 million, I got $10 million, whatever. I just want to earn like 10% on it, right? Because 10% is like double what they could get, and more than double what they could get in T-bills and stuff like that. Not to mention completely liquid. And they have other allocations like real estate and whatnot. And we help them set up those portfolios. There's nothing wrong with that. I would say at the 500K level, and this is also part of just being a little greedy, but like you run your stablecoin strategies throughout the bear market, and then when it comes time and the bear market starts to turn around back into a bull, like ride that 500 that you have up to, $1 million, 2 million, 3 million. Get a little greedy, like take more.
Keep going, man. You're making me feel good.
And then start to run the same exact process, and that's what I want to do, right? Because I know in perspective, like $500,000 is a lot of money. So I'm currently sitting on $250,000 of crypto right now. If I ride that up to 500K, that's great money. Love that, and I'm more in blue chips, I will say. But then $500,000 is not going to retire me, especially me being young, right? So next market, I'm going to do the same thing. I'm going to start to accumulate assets in the beginning of the market, and I'll probably be a lot more conservative that market already than I already am. But just so that way I can build my bag over time and truly build wealth that will change my future, So
Yeah, so here, let me jump in here for a second.
hey,
And yeah, so there are a couple of things. Number one, I think that when you think about your number, like how much do you really need to be financially free, and what does that look like? I think that many people may overestimate. Well, okay, great, but in DeFi, Mike, do you really need $500,000 to be able to generate the cash flow to sustain your lifestyle, or maybe even one that's better than what you're currently living? And I would submit that the answer is you don't need 500K, man, to be able
I
to
know.
live extremely well in DeFi.
That's the number that I've got locked in my head. But no, if I ended up with 300,000, 400,000, that would still be awesome, because you guys know easily you can make 10-20% a year. And so basically for each 100,000 you're making $20,000, $10,000 to $20,000. That roughly equates to anywhere from 800 to 2,400 a month. That's not too bad. I mean, when you're adding it,
You're absolutely right. You're absolutely right. And the thing that I would say about that, though, Mike, is I, not for a second, do I believe the official inflation numbers, because I go to a place called the supermarket and I buy called groceries, like
By that stuff that you have to have. Yeah.
And I buy energy, so the inflation numbers are complete nonsense.
Yeah.
And so what I would say is that if you're just earning 10% and you're holding cash, stables, USDT, USDC,
you're
then
keeping up with inflation.
Probably not. You're probably not even breaking even, I think. I think inflation is probably higher than 10%. But that's just my made up numbers there.
Cost of living significantly going up, I would say. And to piggyback on that, David, it's like it doesn't seem like a big deal in perspective, but it's like when they measure inflation, they're measuring it across like everything a lot of the times, right? Like literally everything,
Well,
which
and they
maybe
changed the basket of assets that they
Right.
gauge it.
Right.
But like when we look at everyday living, the standard person, inflation is going to be a lot higher than everything altogether. Like Apple, they're not raising their prices significantly, when it comes to buying an iPhone because they've been priced high like this whole time. And I believe they just started raising those prices, but ultimately, when we go to the supermarket and we buy what used to be a $4 item for now $5, that right there is 20% inflation. Like
Shit, I
we have to
wish.
think about it in that regard. They tack a dollar on it, doesn't seem like a lot, but when you have a dollar on all these items or 20% on all these items, and then all of a sudden, a pizza that costs $5 is now like $7 or something like that. It's like it doesn't seem like a lot in perspective. I'm like, oh, inflation, but it is.
I've seen, I on some items, I've seen like 100%,
Yeah,
markup. When you go to buy a steak or you go to buy, a
Since 2020.
pizza.
Yeah,
Yeah,
since 2020. So the Powell and Biden era policies during the pandemic are what created this inflation that we're suffering through now. And when Lynn Alden says nothing stops this train, I don't necessarily think that that means nothing stops the Bitcoin train. What I think that that actually means is nothing stops the expansion of the deficit. And what I take that to mean from her is that the tools that the Fed has are no longer effective, that they cannot slow down the pace of the debt growth. And the tools that they have are actually counter effective. So that's what I take nothing stops this train to mean. And so that means that the escape valve must be the dollar. And so if you take a look, Mike, Jake, if you take a look on TradingView at DXY, sitting at like 97, the dollar index is sitting at major long-term support. And so next week, when Powell cuts, if he cuts and the long end blows out and the dollar breaks down at the same time, then that would be a very interesting setup. I think long end rates moving sharply higher would be negative for equities, but throughout the rest of the year, a dollar breaking sharply lower, I think would be supportive of risk assets. So it's going to be really interesting to see what happens next week. I think it's a sell the news event. But then throughout the rest of the year, I think that that's where we get these amazing opportunities to buy some of the alts that maybe we haven't been able to get into yet on some type of a dip throughout the rest of September. That's what I'm waiting for. And something that I do not think about is I don't think about making multiples. Okay. So like a lot of people talk about like, well, if I could make a 5x or a 7x, and like for me, I don't think about things that way. I think about how much risk am I taking? How volatile is the asset that I've deployed capital into, that I'm exposed to, and how can I lose? That's what I think about. Before I start counting my chickens, I think about how can I lose in this trade.
of
And so
course.
for me right now, I'm in LPs.
failure is not an option.
Yeah, no, failure's not an option for sure, Mike. But like, I'm sitting in LPs right now, and I think about my deltas. Okay, I manage my ETH deltas. That's what I do. And right now, I'm a little
Real
bit
quick for
long.
the listeners, can you explain just briefly what a delta is?
Sure. So delta measures a rate of change. And in this context, if I have one positive ETH delta, what that means is for every dollar that ETH moves, my position moves by $1. I've got one positive ETH delta. If I have 10, then for every dollar that ETH moves, my position moves by $10. If I've got 100 ETH deltas, then for every dollar ETH moves, my position moves by $100. That's what delta means in this context. Do you think that worked there?
I think so.
Okay. Yeah.
Continue. I just want to make
No,
sure that we're always
no,
explaining.
I know. And look, this is a complex topic. It's not, this for me, this comes from the options world, because liquidity provision to me is very similar to trading options. So when I think about my LPs, I think about value at risk, I think about my deltas, and I think about how long I will be at the top of my range versus at the bottom of my range, because LPs are always going to be long, right? You deploy into an LP, you pair with a stable like I have in something like ETH USDT on mainnet on Uniswap. If I'm in that LP, I'm long. The only way I'm not long is if I'm out of range to the upside, sitting fully in stables. That's how I would have zero deltas. Now, while I'm in range, my ETH deltas are always moving. Okay, it's not static. If I'm smack dab in the center of my range, then I will be 50% in ETH, 50% in cash. If I'm at the very bottom of my range, then I'll be 100% in ETH. If I'm at the very top of my range, then I'll be 100% in stables. So, what does that mean in practice? Well, at the top of my range, I have zero ETH deltas in that LP. Let's say that I deployed 10 ETH into the LP when I opened it, and I opened it equidistant, where the upper and lower bound of my range are the same uh, percentage amount away from the spot price.
So
So
like so like if it's a 20% range, 10% to the
yeah,
upside, 10% to
plus
the
or
bottom.
minus
Yeah.
5% wide, something like that. Well, if I take those 10 ETH and I deploy into an LP equidistant, what happens if price is at the very bottom of my range? Well, I will be plus 10, a little bit more than plus 10. Because remember, if I took those 10 ETH and I entered an LP equidistant, on entry, I had to swap half of those ETH, 5 ETH, for stables to be able to enter that LP. And then on the way down, those stables are used to buy more ETH. So if I were to exit my range on the downside, I would actually have a little bit more than the 10 ETH that I deployed in. So in ETH terms, I would have a profit. In US dollar terms, I would not. And I may not have been able to beat divergence loss depending on how much yield I generated and how long it took for price to exit my range. So these are all things that I'm thinking about. And if I'm in an LP and I'm in range, I've got positive deltas. And so I like to hedge my LPs. And I do that in a couple of different ways. I can either use futures, which is a very capital efficient way of hedging, or I can use my capital structure to hedge. And the way that I would do that is using Aave. So let's say that I deploy assets on the collateral side on Aave, and then I borrow ETH. Okay, so on the supply side, I've got ETH or Bitcoin or stables or something else. And then on the debt side, I borrow ETH. When I take that borrowed ETH and deploy it into an LP, I have hedged that LP. In fact, depending on how I enter the LP, I could actually enter the LP and be net short, or I could enter the LP and be flat. I'm talking about my deltas now. Or I could enter the LP and, depending on what I have on my collateral side, I could be net long. So, there are different ways of hedging this stuff. You can use options, but that really doesn't work in DeFi yet because none of the decentralized options protocols are liquid enough. And so when things start, number one, the spreads are ridiculously wide on these decentralized options trading protocols. And number two, when markets really start moving, the liquidity dries up. So you can't trade. And so if there's no liquidity to trade, then it's not a real market. They're almost illusory. So to me, the ways to hedge would be number one, with your capital structure, using a money market, and number two, using futures. And as long as you understand what your portfolio ETH deltas are and how to calculate that, then you can stay in markets whether they go up, down, left, right, sideways, in circles, and continue to earn yield. And so that's what I'm doing right now, as I'm waiting for the outcome of, Jay Powell next week, and we get to see what happens there. And hey, if there is a correction or a sell-off, like nowadays, a sell-off in quotes in the S&P would be like 3 or 5%, like something really small. But if that happens, man, I'm going to be buying with both hands, just buy, 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 Bye. Because I think we go much, much higher. Because as Lynn Alden says, nothing stops this train. The only tools that central banks have is print and cut. And printing and cutting, I think, will only result in number go up. So throughout the rest of the year, I think number go up. And next week, I'm hoping for a sell the news event so that I can buy some items I've got my eyes on at a little bit of a discount. That's what I'm looking forward to. So we'll see.
Yeah.
I like it. Yeah. Well, one thing I wanted to chime in on as well is like a couple weeks ago, I think we were talking about the Jupiter launch with their lending market and everything, and made a live deposit, and I wanted to just show performance of that, right? To kind of gauge.
Oh, that's right, Jake. Last week you put 10K on JupiterLand.
Yeah, I think it was 3 weeks ago. Believe it or not.
Oh yeah. You had an arbitrage position open, right? It was Syrup USDC, and yeah.
Yeah, it's the multiply one. So we take a look at this, right? Just to show you guys real results. I don't know if they have like a thing that shows you just your net worth or what. But what I like to do is like if I were to like withdraw right now after all the slippage, price impact, cost, stuff like that, it's going to be a better judge of how much I am actually available. So if I go and unwind this, what my Phantom wallet is showing right now, which is not showing because I'm currently sharing my screen, it's 355 USDC and 82.89 syrup. So if we put that on a Google sheet, 355 USDC and 89.82 syrup. Or sorry, I think it was 82.89. There we go. 82.89. Now syrup USDC is currently worth I think like $1.12. Let me make sure I'm right over here. Yeah, $1.12. So we'll just call that SUSD, and this is USDC. And then I'll zoom in for you guys. USDC is obviously worth $1. So if we were to withdraw right now, I'm getting out roughly 92.83 over here, and I'm getting out roughly 355 USDC over here. So this has actually done surprisingly well because the deposit I think was around 9,400 or 9,450, I believe it was. So it just shows like this thing worked, but the consideration is now that APR is significantly lower. We're doing an 11% APY right now. Sorry, I meant APY. We're doing an 11% APY right now because that supply has gone down for USDC, and the borrow has also gone up. And then on top of that, for the supply APR on Syrup USDC, I don't think we are getting APR either way. We were just getting the native one. So that's kind of the process that I've been running. And what I've also noticed is the available borrow has drastically gone up because people have been withdrawing from this position because they've determined they could get better yields elsewhere. So
Yeah, Jake, something that I really like when you're performing interest rate arbitrage like this, and take a look at these two protocols, Jake, real quick. I
okay.
like using Pendle in combination with Term Max. And so Term Max allows you to both lend and borrow at fixed rates.
Okay.
And so if you supply a PT from Pendle as collateral, remember you've got fixed yield on that PT. If you supply a fixed yield asset as collateral on TermMax, and then you borrow against it at a fixed rate, then you can essentially lock in your gain, which is pretty darn cool. So the position that you're in, Jake, has performed extremely well. That Syrup USDC, and I think you borrowed USDC. So that position worked really, really well. The problem is that the supply and borrow, they're both variable. Those yields are both variable.
Correct.
So, you can lock in yields here by supplying an asset that earns fixed yield and then borrowing at a fixed rate. So that's pretty cool.
Yeah, I'll check this out, David. Thanks.
And what's it called again?
TermMax.
TermMax.
TermMax. All right.
Yep.
All right. So I guess my next question would be, just kind of, what is each of your next step with your portfolio?
Yeah. So my next step here is I'm sitting mostly in cash right now, and I'm just waiting for the outcome of next week. That's what I'm waiting for. And if there is some type of a dip after rates are cut next week, um, even if it's a small dip, I'm going to be a buyer of that dip. And then I think, hey, October, November, like, let's go, baby, alt season. Like this is when it's supposed to come.
So,
So,
well, I
yeah.
guess my question would be, David, is you said that you had your eye on some projects that you were wanting to DCA into. I mean, what are those projects, if you don't mind sharing?
Oh, yeah, 100%. So, Hyperliquid, Athena, ENA. I really like Tau. I want an AI play, and so I think Tau could do pretty well. Um, off the top of my head, I really like the idea of having a meme. And I think that SPX 6900, if we reach 6900 on the S&P and Bitcoin peaks at the same time, that meme coin, it would be great for crypto lore. If the S&P hits 6900, Bitcoin tops at the same time, and
Yeah,
SPX 6900 does like a 100x or something crazy. I
yeah,
don't
yeah.
think it will, but like it would be really great for crypto lore, and so that's why I want to gamble on a meme coin like that. There are other memes you could take a look at, like Pengu. You could take a look at Fartcoin, maybe. There are plenty of other tokens that we could talk about here, but my favorites outside of Bitcoin, Ethereum, and Solana are Hype, ENA, Tau, SPX, and you could keep going down the list. I like the idea of having some GameFi exposure. So, AVAX may be a proxy for GameFi. AVAX plus 13% today. Pushing up towards its 200-week moving average. So really nice move out of AVAX today. And you could also take a look maybe at Superverse, if you want some GameFi exposure. But haven't seen much of a move out of Super yet. So yeah, those are a handful of my favorites, Mike. Hype, ENA, Tau, SPX. I mean, BNB has done
Yeah.
extremely well. So wouldn't be surprised to see BNB continue to run higher. And yeah, those are the ones at the top of my watch list right now.
Yeah, it's. I would tend to. I mean, I wish I would have gotten some hype, a while back, but yeah, hype definitely seems a little bit hot right now for me to want to DCA into, and um, I had another one that you mentioned that's I feel is kind of hot too, but I can definitely see why you're waiting for a bit of a pullback before you DCA into those. How about you, Jake?
Yeah, so a couple ones are going to be similar to David. Obviously, hype and BNB is something I want to accumulate more of. Another one would be Ondo. I want to get more into real world assets. Desync is pretty interesting to me. I have a good amount of Aether already, so I'm kind of good on that. Um, I would have said FET if it was a long time ago. Not so much anymore. I'm not looking so
Yeah, I
bullish on
remember that. I remember. Yeah.
Bet.
yeah. But yeah, some syrup would be nice. Some AIOZ. These are just some of like my top ones. And then further on down the list, like obviously there's some Ethereum, Bitcoin, but I would say I want to go heavy into alts. Now, one thing I would say is I have noticed that Polygon token has actually been doing very, very well over the past 3 months. It's like slow and very, very steady. So if I could share my screen real quick, Mike, just taking a look over here. For the longest time, Polygon was just dying, like dying a very, very slow.
Yes.
And it really sucked. It really did because Polygon has a great product. A lot of people use it. It's just its price never got the recognition, I guess. And you could see, like looking all the way back, Polygon being at prices of $1.25, like super, super bullish. And I believe we are actually on the old Matic token at higher prices of like 2 something dollars. Yeah, $3 all the way back in 2021. So at around like 50, 60 cents, I went heavy into Polygon with about like 10, 15 grand. And that's now sitting at like, I want to say about like 5 or so. But the thing is, over time, using one of my stablecoin strategies on Instant App with Fluid, I have accumulated a lot of Polygon tokens. Just over the past, like, I don't even know how many months, but it's lending out USDT for 9%. And practically all of this is just in Polygon rewards. So let me connect my Gravity real quick. Um, but I want to say I've accumulated like 12, 1,300 Polygon tokens. So do I think Polygon's going to go back up to $3? Maybe eventually, not in the short term, probably not this market. Do I think $1 is imminent this run? Yes. So you'll see that I've generated about 1,200 Polygon tokens, right? Which is in line with that 9% APR. But imagine that Polygon goes to, $1 or so. That right there on my $5,000 investment is all of a sudden well over a 25% ROI over the course of probably by then 8 months or so, or 6 months or so, which is pretty good. And it just goes to show like compounding that and using that to build like somewhat of a flywheel in your portfolio is a cool little system, especially if you don't need that income. So,
Jake, I actually think that Polygon could perform, quite a bit better than what you think. I think that I think that it could do really, really well this cycle because it's a legacy chain, and there's a lot of protocols built on Polygon. And, as of right now, it's sitting at number 12 by DeFi TVL over on DeFi Llama with over $1 billion in DeFi TVL, 710 protocols built on Polygon. So, it is definitely a protocol that has, there's some oomph behind it. You get some RWAs on there, you get some type of hype back on Polygon on the chain, maybe some stablecoin protocol, or maybe something like Athena launches on Polygon, or maybe Athena launches if USDE doesn't already exist on Polygon. Maybe they launch it there. Some type of catalyst to get Polygon back into the news a little bit, and then I think that hype could push POL, the poll token, much higher. So, I actually kind of like that play.
Yeah, me too.
So, yeah, I mean, this is something that I definitely would love. Maybe like in the next episode, or maybe here on Friday. It's something that David, we could talk about, and Jake, if you're able to join us. If not, we can talk about it next Wednesday. But I've really gotten kind of addicted to building out, and to because I'm very visual, and so that's why I'm always stressing for people to, use spreadsheets. Download our free spreadsheet that we have in the Discord. If you're not a member of that, please, by all means, join that. And then, if you want to use the tools that one of the many tools that Jake uses is and I use is Metrics Finance. All of that's the links are down in the description of this episode and on the channel. But one thing that I do is I like to build these out so I can better understand how I want to deploy assets when I do get to a point to where, I'm exiting, I'm, getting into stables, how I want to redeploy that, timeline wise, kind of, what class of asset, those sorts of things. And then of course, obviously, reward myself for the 5 years of, day in and day out learning and stacking and discipline. And, I want to make sure I'm taking something out to, do a little something with. But I mean, what is, your individual thoughts on, doing things like this?
Here, let me just jump in real quick. So when it comes to conservative income generation with liquidity pools, I think
Well, I mean, not necessarily like dissecting it, but just in general, doing these, because I mean, this isn't necessarily one that I'm going to be using, but just being able to build out your roadmap or your plan of what you're going to do with your assets that you're holding now. You DCA out what your DC or your levels are that you're going to ladder out, and then once you're laddered out, what you're going to do with those assets. I mean, how do each of you, David, I mean, how do you plan out as you're taking your profits, like what tools do you use to track when you're going to do that, or do you even use tools? And then once you do ladder out, what tools do you use to map out what you plan on doing with those assets? Like, what are the tools in your toolbox?
Sure. So here, let me ask you a question, Mike. Do you ever think about laddering out?
Oh, shit. Hold on.
Look, I vanished,
Yeah,
and now,
let's see.
now
I
I'm
removed
the
the
whole
wrong
screen.
thing. I removed the
Oh,
wrong thing. That will
oh,
teach
good
you to
man.
talk bad about my.
I know I like your idea. Look, you got to have a plan, and for
Yeah.
me, I don't really think about like laddering out of crypto assets. I think that the 4 year cycle and that whole idea based on the Bitcoin halving cycle, I think that that was probably never real, and it was always just kind of some type of curve fitting and imagined. And so I think that what we're seeing now is like real adoption. And so why, if I think that Bitcoin and specifically the smart contract platforms, Ethereum and maybe also Solana, and maybe you could take a look at Sui, not quite sure there yet, but if Wall Street is going to tokenize literally everything on Ethereum, if that's the plan, then why in the world would you ever ladder out? Like, not anytime soon anyway. You probably want to continue to hold your positions for a period measured in years. So that's the way that I think about that. Now, when it comes to anything other than Bitcoin and Ethereum, even Solana I throw in the altcoin bag because it's very, very volatile. You could even throw ETH. ETH is the king of the alts because it is still extremely volatile. But anything outside of ETH, I kind of think about it as through this lens. The protocol or chain must be a successful business. And the protocol or chain, that business, must be returning value to token holders in some way. As long as that is happening, then maybe you hold it long term, maybe. But because those tokens are so ridiculously volatile, when you get a pump, it would be really hard for me not to sell. It would be really, really hard for me not to sell.
Yeah.
So, like when I'm thinking about laddering out, I don't think about laddering out. I
Okay.
think about what positions do I want to hold long term, and what type of stuff do I want to kind of gamble on?
So,
Because when you're
I mean,
talking about something, Mike,
when
with
you
a
do get
hundred,
out of an asset, do you just freaking full send or?
yeah, for the
Okay.
most part.
Okay.
Yeah, I mean
No, no,
that's
yeah. No, I just
if I've got I think about it, I think about it as if I were trading. If I want to close a position and realize my profit, then I will do that. And
Hmm.
Is there a situation where you take partial profits though, David, where you in a trade, let's just say, where you're say $100 in, you're up 200, would you take out your 100 and call it a day? Or
and let it ride? Sure, sure. Depends
okay.
on when we are, and it depends on the asset. It depends on how volatile it is. So, if it's November, the end of November, and Bitcoin has rallied $100,000 from where it is now. Okay, let's just say, like, like fingers crossed, right? Bitcoin gets up to $250,000 over the next couple of months. Just hypothetical scenario here, and the alt that you're holding has, gone up by 500%. Would you exit partially or entirely? For me, I would realize my gains and say, thank you very much. I'll catch you on the flip side.
Yeah.
That's what I would do.
And
But
not a lot of people can do that because the emotions that are tied into that. That's the thing.
mhm,
That's why most people never take profits.
yeah, it's
Well,
tough, man.
and that's why I put it all on my spreadsheet. Is it eliminates those emotions and those feelings, because if I have it in black and white on a spreadsheet, when this asset reaches this price, I'm selling this percent of my bag,
That's
and
why prime
it
always.
holds me to it.
Yep. Always
Because
important.
I mean, that's the advice that exactly what Jake is saying. That's what I have heard the whole time I've been in crypto, is the horror story of people that round trip their bags. They hold for years and they stack their bags. They see huge profits and they take screenshots, not profits, and they end up round tripping their bags. And like I said, I mean, that's kind of why I kind of came up with that $300,000 to $500,000 number, is because if I can cash out at that, that is a nice chunk of change that I can use in DeFi to
Yeah.
make a couple extra grand a month. And you know what? I'm not going to cry myself to sleep if I miss out on another, 3, 4, 5x, because I got a couple $100,000. I'm making an
I
extra
don't
20.
know about that, Mike. You say that, but dude, in practice, if you exited at 500K and then you saw your bag go to 1.5 million, I think you'd probably be pissed. I certainly
Not,
would be.
not at all. I'll be honest. I have my focus, because I think long term. And yeah, I mean, I would be like, well, what if I had a crystal ball? But
Sure. Yeah.
the flip side, what if I didn't, because I thought I was going to get to 1.5 million and then I end up with nothing? I'd rather
Yep.
have
So,
$300,000 for
Mike,
sure than
here's
1.5
the
million dollars maybe.
oh,
What I'm saying?
no doubt about it, man. Here's a nice market adage. Okay, no one ever went broke by booking a profit.
Yep.
You're not gonna get hurt if you book a profit. So yeah, man, makes sense to me.
I'm not super emotional when it comes to my investing. I'm very, very stoic. Like, even when I go to Vegas and gamble, any money that I put on the table, I look at it as entertainment. So like
Yeah.
when I go play blackjack, I'm getting free drinks, I'm meeting new people, I'm laughing and joking, having a good time. If I lose all my money, I spend a couple $100, I spend a couple of hours having a good time. I've spent more than that going to a bar and getting turned down by girls, and getting my hearing loss, and all that stuff. So back in my younger days, but yeah, it's just, I just adopt a mindset of, I have my goals, and as long as I adhere to those goals, then I'm fine. Because yeah, no, absolutely. I mean, I would love to be able to call the top perfectly. I mean, we all would, but can we? Some
No,
people, maybe, not me.
nah, it's impossible. Uh,
You're
yeah, I
you're
mean,
always you're always going to slip up through these cycles, even if you can call it perfectly, let's just say, right? If not this time, then next, right? You're never gonna sell the exact top by the exact bottom. And that's what we all have to realize. And there's always more opportunity. Yes, the gains are gonna be
right.
higher this time around, but if you're already up, like there's always more opportunities. There's new industries emerging. And David, Mike, people ask me all the time, like, oh, when big money gets into crypto, will the APRs go down? And my answer is yes, right? Like blue chip stuff will go down, but you're always going to have a new DEX popping up with a high volume to TVL ratio where you can get a good APR when you first get in. Or you're always going to have a new crypto asset popping up on a new liquidity pool that needs liquidity, right? So
Mhm.
will overall market APRs go down over the course of a decade? Absolutely, right? And the expectations will be adjusted, don't get me wrong, but there's always going to be the opportunity to jump into newer assets or take a little bit more risk to get to
Mm.
that APR. Right now, we could just have very, very good, I'd say, risk adjusted returns. So,
Yeah, Jake, I like what you're saying, man. And, Mike, what I would say is the analogy of the blackjack table. I think that is valid if you're talking about an altcoin with 100% plus volatility.
Mm.
But if we're talking about Bitcoin and Ethereum, I don't think that the blackjack table analogy holds because I view Bitcoin almost as a replacement for bonds. Bitcoin is a non-sovereign digital bearer bond. Kind of, sort of. That's the way that I think about it. Ethereum is the asset for the digital economy, where it seems as though most RWAs are going to be on Ethereum chains. So outside of Bitcoin and ETH, if I'm taking a look at anything with super high vol, maybe you could think of it as gambling just because the volatility is so high. But for Bitcoin and ETH, man, those for me are assets that are going to be with us for a long, long time.
Yeah, and the blackjack analogy is more for my frame of mind, and the way that
Oh, I
I
see.
view
I see.
as opposed to the assets. But I definitely I get your point. Me, I honestly I hold no Bitcoin, like maybe 20 or $30 that I got to put on Mammo to test out the pool on there. But and Ethereum, I have enough for gas. My portfolio is degen. I mean you've heard the assets I'm in. I'm mid to low caps because I'm looking to 7x. I want a 7x or more. And at 10x would be perfect. But I'm not going to get that with Solana. I'm not going to get that with Ethereum. I'm not going to get that with Bitcoin in this cycle. Maybe long term, but not in this cycle. I'm looking to get that 7, 8, 9, 10x this cycle and get that in the stables. And then with the money that the yield that I'm earning each month with that treasury, I'll be DCAing into ETH, into Bitcoin, and stacking those bags and, not selling those and earning off those. So, I mean, I will be stacking those, later on. And maybe that's a bad move because, I mean, hell, we've seen what, Bitcoin has done already, this cycle. Ethereum hasn't done a whole lot. We're just starting to get back up to its all-time high. Where are we sitting right now?
44-ish.
Yeah,
Okay.
40, 43, 43
Yeah,
and a half.
43, 47.
So,
So,
he-
yeah.
so
So, I mean, we haven't done anything crazy with Ethereum yet, and I definitely see where there's upside potential because, like you said, David, I mean, finance, DeFi and, TradFi now with tokenization is just injecting liquidity like crazy into Ethereum,
right,
on day.
but Mike, you got to be careful of those DATs though. Those digital asset treasury companies, for example, SharpLink or Bitmine.
Mm,
So SharpLink, instead of buying ETH, they are spending $1.5 billion buying back their own stock. And
mm,
to me, that's a big red flag because why would they not be buying more ETH? Well, I think the reason is they've had to dilute shareholders so much to raise funds to buy ETH that their MNAV has been compressing, and now they've got to
all right.
buy back
What's
shares.
is there a quick way to define MNAV?
So it's the premium that you pay when you buy the shares rather than buying the underlying,
Okay.
which is ETH. So there's
Okay.
a premium that you pay when you buy strategy shares instead of buying Bitcoin, or there's a premium that you pay when you buy Bitmine shares instead of buying ETH. Same
Gotcha.
thing is true for all these digital asset treasury companies. It's
So the
referred to an
premium
M.
is MNAV.
Yeah, it's referred to as an MNAV, and what we're
Okay.
seeing is this MNAV compression,
Hmm.
which makes it less accretive for these DATs to issue shares
You're
to
killing me,
buy
Smalls.
more. I know, man. I know. It's the jargon. It's the jargon. How do I? So if I'm Bitmine, if I'm Tom Lee, right, and I've got to raise money to buy ETH, well, how do I do that? In
Hmm,
the open market, I can sell my shares. And
hmm,
so if I sell shares, what I'm doing is I'm diluting existing shareholders.
hmm,
So if I create more shares, then I'm inflating the number of shares. That dilutes the value of each
hmm,
share. But the whole point is to take the proceeds, the cash that you raise when you
hmm,
sell these shares, and then go and buy ETH with it.
hmm,
And the idea behind that is, well, if I buy ETH and my shares have this premium, this MNAV,
hmm,
then investors, rather than buying ETH itself, will buy my shares because as or if ETH appreciates, my shares should outperform ETH. That's the entire idea. But that only works if number go up. Like,
Yeah.
So that's the thing.
Yeah. No, it's like I said. I mean, Bitcoin is definitely one that I want to be DCing into on a regular basis with the yield that I earn, because I definitely want to be investing in things and deleveraging against the dollar, because I don't have a very positive outlook for the dollar. I mean, we spent a good portion of this episode talking about inflation. So, real estate, in the chat, Neil Weston, any gold. I personally, I love precious metals. I love collectible coins. I have since I was a kid. I'm always stacking, stuff in my safe. But yeah, I mean, even ammunition, lead. It's
I mean,
price.
whiskey,
Yeah,
tobacco,
price almost.
oil,
Well, there's
gasoline,
some
stuff like
stuff,
this.
oils.
Yeah,
I'm
yeah,
looking
yeah.
for anything that goes up in value quicker than the dollar is being depreciated. That's
You know what I'm looking for, Mike? I'm looking for stuff that can't be printed. So that is gold, silver, whiskey, tobacco, land, desirable land. Um, Bitcoin obviously can't be printed. So I know Mike. It looks like Mike, his Starlink. It's one of those trees that got fast moving trees. Got in the way of his Starlink there. But yeah, man. So Jake, what do you think about next week? You think that we're going to see a sell the news event after the rate cut, or you think that we just continue chugging along and melting higher? Oh,
we
can't
lost
hear
you,
you,
Jake.
Jake.
It's September, so we probably will see some green leading up, probably more green this week, like we have seen, and then some red coming in next week, and be able to buy the dip. So, yeah.
Yeah, man.
Well, all right. Well, I mean, it's like we can definitely cut this off. I know you guys have probably got stuff to get to. We've gone over our hour, but I greatly appreciate, as always, both of you, showing up here on Wednesdays and sharing with the community, because I mean, you guys are just a ton of alpha. And I know I'm always learning new terminology from David. And it's always important, even if you're not going to delve into some of these more complex strategies. It's good to have a well-rounded understanding of how these markets move, what these markets are, consist of, how it's evolving, with traditional finance, and what David was talking about. What was that called? M something?
MNAV.
Yeah, MNAV. So, basically just, how you need to understand the battlefield, because that's the way I look at investing. Is it's a battlefield. It might be ones and zeros, and use currency and whatnot, but there is strategies. It's a chess game. It's outmaneuvering other people, and like it or not, you're either liquidity for somebody else where they make profit, or you are making somebody else your exit liquidity.
Mm-hmm.
So, I mean, it sounds bad, but that is the way it works, and that is why you need to make sure that you are educating yourself with good quality content, and not just logging on to shows and watching them hype the projects that you are bullish on. I want to watch shows that are going to pick apart my projects and
Yeah.
show me everything that sucks about them. That's why I was so appreciative when you two gentlemen were, kind of not, talking bad about Arrow, but you were pointing out the flaws, and rightfully so. The things that you said were 100% accurate. And I thank you for that, because it made me go back and look at Arrow again. And it made me, have to, basically justify why I'm invested in that. So you should always, always look for more critical information to your point of view. And this kind of goes back to how we started this episode. And I'll end on this with the tragedy that happened. We need to open our minds up to opposing views, Just because somebody says something you don't like does not mean make them an evil or a bad person. It means they disagree with you. It's time for people to be adults. It's time for people to have an open mind and an adult discussion about complex topics. If it's finance, if it's politics, whatever it is. David, closing thoughts, sir.
Dude, I'm looking at X right now, bro, and I'm just looking at pictures of Charlie Kirk and his family, and yeah, man. I mean, look, like what we do in crypto and DeFi, and all the hard work that we put in. This is obviously important to secure our financial freedom, but like, dude, in the United States, we have a thing called freedom of speech. And, there needs to be some change if a psychopath can murder someone on a college campus for speaking their mind. Like, that cannot be allowed here, period, full stop. So, like, crypto and DeFi is great, but man, like, that is just, that's got to change, man.
Yeah.
So that's my parting thought. But then next week, looking forward to what fucking Powell does. Excuse my French.
Right.
Yeah.
All right. Jake, closing thoughts?
Same thing as David. Again, like you shouldn't be murdered over sharing your opinion. And it's horrible, to think that like, and I hear this from my brother because he's, sitting in a college classroom as this happens, saying that people are laughing about it in his class, So it's like, it's just horrible to hear that, even if you're on an opposing viewpoint, like you don't want violence on anybody. And yeah, as David said, looking forward to next week to see how the crypto market performs. Yeah.
I think that's a good place to end it. Thank you, gentlemen, again. And Jake, you're welcome to join us on Friday. David, look forward to Friday. Till next time, Veteran Crypto out.